Imagine walking into a bank. You fill out forms, show your ID, maybe even sit through a credit check, all before borrowing money or earning a tiny interest rate on your savings. That's the way the traditional system works. Slow, restrictive, and designed around gatekeepers. Now, picture the same experience without a bank at all. No paperwork, no waiting, no permission. Just an open system where anyone, anywhere in the world, can lend, borrow, and earn interest with the click of a button. That vision isn't a dream. It's what Aave brings to life. Aave, which means ghost in Finnish, is one of the most important projects in decentralized finance, or DeFi. It has grown into a platform that reimagines how lending and borrowing could work in the digital age. Instead of relying on institutions, Aave runs on smart contracts, lines of code on the Ethereum blockchain that automate the rules of finance. No intermediaries, no trust required. For people locked out of traditional banking, this matters. Billions of people around the world don't have access to credit. Even for those who do, borrowing often comes with high interest rates, hidden fees, and slow approval processes. Aave flips the model. It lets anyone become their own bank. If you have assets, you can lend them out and earn yield. If you need liquidity, you can borrow against your crypto instantly, with no questions asked, as long as you provide collateral. But Aave isn't just about recreating banking on the blockchain. It's about doing things banks could never do. Features like flash loans, which let users borrow millions of dollars without collateral as long as they repay within a single transaction, sound almost impossible in traditional finance. Yet in Aave's world, it's standard. These innovations open up entirely new possibilities for traders, developers, and financial ecosystems that don't exist yet. Still, Aave's story isn't just technical, it's also about trust and community. Unlike banks, Aave doesn't have executives deciding loan approvals. Its governance is decentralized, meaning decisions about the protocol's future are made by holders of the AAVE token. This puts power directly in the hands of users, not institutions. Of course, this radical openness comes with risks. Volatility, hacks, and regulation are constant challenges for DeFi. And Aave, like all major protocols, has faced scrutiny. Is it safe? Is it sustainable? Can it survive outside the crypto bubble? These are big questions, but they're also what makes Aave worth understanding. Because it's more than just another crypto project. It's a window into what finance could look like if we rebuilt it from scratch, open, global, and governed by code instead of corporations. The story of Aave begins during the first big wave of crypto excitement. Back then, it wasn't even called Aave. It started as a project named ETHLend, created by Finnish entrepreneur Stani Kulachov. ETHLend's idea was simple but powerful. Connect people who wanted to borrow crypto with people who were willing to lend it, all in a decentralized way. No banks, no middlemen, just peer-to-peer lending built on Ethereum smart contracts. ETHLend was groundbreaking for its time, but it had limitations. Matching individual lenders and borrowers directly was slow and clunky. Liquidity was fragmented, and users often had to wait for a counterparty to appear before anything could happen. The vision was there, but the design needed a more scalable solution. ETHLend rebranded as Aave, which means ghost in Finnish. The new name symbolized its mission to become an invisible layer of finance, quietly powering decentralized markets around the world. With the rebrand came a major shift in design. Instead of trying to match lenders and borrowers one by one, Aave created liquidity pools. Users could deposit assets into shared pools, and borrowers could draw from those pools at any time. This approach solved the liquidity problem and laid the foundation for Aave as we know it today. From the start, Aave's vision has been rooted in openness and access. Traditional finance is exclusive. Credit depends on your credit score, your income, your geography, even your government's regulations. Aave's system removes those barriers. If you have crypto, you can participate. No identity checks, no gatekeepers, just collateral and code. But Aave also envisions something bigger than just copying banks on the blockchain. It wanted to explore financial ideas that were impossible in the old world. One example is flash loans, a concept unique to DeFi. With flash loans, users can borrow large sums instantly without collateral, as long as they repay within the same transaction. It's like getting a no-questions-asked loan for a few seconds. While niche, this tool has enabled arbitrage opportunities, debt refinancing, and complex strategies that simply don't exist in traditional finance. Aave's vision also extended to governance and decentralization. By introducing the AAVI token, the protocol gave users the power to shape its future. Token holders vote on upgrades, risk parameters, and new features, ensuring that control stays in the community rather than a central authority. Over time, Aave's vision has expanded beyond Ethereum. Today, it operates on multiple blockchains, including Polygon, Avalanche, and others, making it a multi-chain liquidity protocol. The team's long-term goal is to make Aave not just a DeFi app, but a cornerstone of a global permissionless financial system. At its heart, Aave's origins and vision revolve around one idea: financial freedom through decentralization. It's about giving people the ability to borrow, lend, and innovate without waiting for permission. That's a bold mission, but one that has already reshaped the DeFi landscape. Of course, vision only matters if the technology delivers. So how exactly does Aave work under the hood? That's what we'll uncover next. Aave is a liquidity protocol. That means it doesn't just connect individual lenders and borrowers instead. It creates large pools of assets where people can deposit or borrow at any time. This design makes the system more flexible, efficient, and scalable than the peer-to-peer model ETHLend started with. Here's how it works in simple terms. Lending and borrowing pools. When a user deposits crypto into Aave, those funds go into a shared liquidity pool for that specific asset. In return, the depositor receives something called an aToken, for example, AUSDC if they deposit USDC. These tokens automatically accrue interest in real time. So instead of waiting for monthly payouts like in a bank, your balance grows continuously like watching a clock tick forward. Borrowers tap into these pools by posting collateral. Let's say someone deposits ETH but wants to borrow USDC. They can lock up their ETH and instantly draw USDC from the pool. If they don't repay, their collateral can be liquidated to protect the pool's solvency. This over-collateralized model ensures that lenders are always protected, even if borrowers default. Interest rates. Aave uses a dynamic algorithm to set interest rates based on supply and demand. When more people want to borrow an asset, rates go up to encourage more deposits. When liquidity is abundant, rates drop. It's a self-balancing system designed to keep pools healthy and responsive to market conditions. Flash loans. One of Aave's most famous innovations is the flash loan. In traditional finance, borrowing without collateral is unthinkable. But in Aave, flash loans allow users to borrow any amount of liquidity as long as they return it within the same blockchain transaction. If they don't, the transaction simply fails. This has opened the door to powerful use cases. Arbitrage between exchanges, refinancing debt instantly, executing complex trades with zero upfront capital. While advanced and sometimes controversial, flash loans showcase how Aave doesn't just replicate finance, it reinvents it. Governance with aToken. The Aave token isn't just a tradable asset. It's the backbone of governance. Token holders can propose and vote on upgrades, parameter changes, and risk management policies. For example, they decide which new assets can be added to lending pools or how much collateral is required. This system gives power directly to the community, making Aave a decentralized and evolving protocol. Safety mechanisms. Because DeFi carries risks, Aave includes multiple safety layers. One of these is the safety module, a backstop that uses staked AAVE tokens to cover shortfalls if the system ever faces a liquidity crisis. This aligns incentives. Token holders benefit from governance rights and staking rewards, but they also share responsibility for the protocol's security. Multi-chain expansion. Though born on Ethereum, Aave has expanded to other networks like Polygon, Avalanche, and Optimism. This lowers fees and broadens access, ensuring more users can participate without being limited by Ethereum's congestion or high gas costs. In short, Aave's architecture blends liquidity pools, smart contracts, algorithmic rates, and community governance into a system that is transparent yet trustless. It feels familiar lending and borrowing, but it operates in ways that traditional banks simply can't match. But the question is, who's actually using Aave, and how is it shaping the wider DeFi ecosystem? Let's explore that next. Aave isn't just code on Ethereum, it's a living ecosystem with millions of users, billions of dollars in liquidity, and a reputation as one of the cornerstones of DeFi. Since its rebrand, it has steadily grown into one of the largest decentralized lending platforms in the world. Who uses Aave? The users fall into three main groups: lenders and savers, people who want to earn passive income on their crypto. Instead of letting tokens sit idle, they deposit them into Aave's pools and earn yield. For many, it's like a high-yield savings account, but global, permissionless, and running 24/7. Borrowers, crypto holders who need liquidity without selling their assets. For example, someone might lock up ETH as collateral and borrow stablecoins to pay expenses, all while keeping exposure to ETH's future price movements. This flexibility has made Aave a go-to option for DeFi traders and long-term investors alike. Advanced users and developers traders use Aave for arbitrage opportunities, hedge funds tap into its liquidity, and developers build apps that integrate with Aave's smart contracts. Flash loans in particular have enabled sophisticated strategies that are only possible in DeFi. The Aave ecosystem. Over time, Aave has become more than just a lending app. It's now a protocol layer integrated across DeFi. Projects like Curve, Balancer, and Yearn Finance interact with Aave's liquidity pools, creating a network of interconnected financial apps, invisible to most users but essential to making things flow. Aave has also expanded across multiple blockchains, including Polygon, Avalanche, Phantom, and Optimism. This multi-chain presence helps lower fees and broaden access, especially for users in regions where Ethereum gas costs are prohibitive. Aave's innovations. Adoption has also been fueled by Aave's willingness to innovate. It launched Aave Arc, a permissioned version of the protocol designed for institutions. By offering a compliant framework, it opened the door for traditional finance players to explore DeFi within regulatory boundaries. The protocol also expanded into real-world assets. By bridging tokenized assets like real estate or trade finance into DeFi pools, Aave is exploring how decentralized liquidity can support more than just crypto-native assets. Community and governance. Another driver of adoption is Aave's governance model. The Aave DAO, powered by AAV token holders, votes on everything from risk parameters to new features. This community-led approach has built trust and engagement, making users feel like participants rather than customers. The DAO has even funded grants for developers and research, ensuring Aave continues to evolve. Global reach. Today, Aave secures billions in total value locked and is one of the most widely integrated DeFi platforms. From individuals in emerging markets using it for access to dollar-denominated loans, to professional traders using it for sophisticated strategies, Aave has become a financial tool with truly global reach. But adoption hasn't been without challenges. The same features that make Aave powerful also expose it to risks from hacks, to regulations, to market volatility. To understand Aave's full picture, we have to look at its challenges and criticisms. For all of Aave's success, it isn't without risks and controversies. In fact, its growth has brought new scrutiny, and its design comes with trade-offs that are worth unpacking. At the end of the day, Aave is just code running on a blockchain. And while its contracts are audited and battle-tested, no system is flawless. Bugs, vulnerabilities, or exploits could drain liquidity pools in an instant. We've seen other DeFi protocols suffer catastrophic hacks, and Aave is always a target because of the billions it secures. Even with safety modules and insurance-like mechanisms, this risk never disappears. 2. Aave relies on over-collateralization. That means borrowers must lock up more value than they borrow. But when markets move fast, collateral can fall below required levels, triggering liquidations. For users, this can mean losing assets quickly in a downturn. While this system protects the protocol, it can feel harsh and unforgiving, especially for newcomers who don't fully understand the risks. 3. DeFi operates in a legal gray area, and Aave is no exception. Regulators worldwide are paying closer attention to decentralized protocols that mimic traditional financial services. Lending, borrowing, and yield generation all fall into areas banks and governments tightly control. While Aave has made efforts like Aave Arc for institutions, its open protocol still challenges existing frameworks. If regulation tightens, access to Aave could be restricted in some regions. 4. For the average person, using Aave is not as simple as opening a bank app. It requires understanding wallets, gas fees, collateral ratios, and governance tokens. While DeFi enthusiasts see this as part of the fun, it's still a barrier to mainstream adoption. Until interfaces become as smooth as traditional apps, Aave will remain intimidating for many. 5. Because Aave's pools are tied to crypto assets, volatility is baked in. When markets crash, borrowers are liquidated and lenders face reduced yields. Stability is hard to guarantee in a system built on assets that can swing wildly in price. Unlike banks, Aave doesn't have deposit insurance or central bank support to cushion the blow. 6. While decentralized governance is empowering, it isn't perfect. Token holders may not always act in the long-term interest of the protocol. Large holders, or whales, can have outsized influence on decisions. And participation rates in votes are often low, raising questions about how decentralized governance truly is. Despite these criticisms, Aave has built a reputation for transparency and resilience. The community addresses risks openly, and the protocol has weathered storms that could have sunk others. But challenges remain, and whether Aave can scale sustainably depends on how it handles these pressures. The question then becomes, where does Aave go from here? What role could it play in the future of finance, not just in DeFi, but in the global economy at large? The future of Aave isn't just about one protocol. It's about where decentralized finance as a whole is heading. Aave has already proven that peer-to-peer lending can work at scale. But the next chapter is about becoming a cornerstone of an open financial system used by millions, not just crypto enthusiasts. One clear path forward is deeper collaboration with traditional finance. With Aave Arc, the protocol created a version designed for regulated institutions. This could bridge the gap between DeFi and banks, enabling hedge funds, asset managers, and corporations to tap into decentralized liquidity while staying compliant. If successful, Aave could become the back-end infrastructure for both retail and institutional markets. 2. Another frontier is the tokenization of real-world assets, RWA. Imagine a future where mortgages, trade finance, or even treasury bonds are tokenized and plugged into Aave's liquidity pools. Users could borrow against tokenized houses or lend against tokenized invoices, all without intermediaries. Aave has already taken early steps in this direction, and if adoption grows, it could transform global credit markets. 3. DeFi is no longer confined to Ethereum. With scaling solutions like Polygon, Optimism, and Arbitrum, plus alternative blockchains like Avalanche and Base, Aave has expanded beyond its Ethereum roots. The next phase may be cross-chain liquidity, pools that span multiple chains seamlessly. This could make Aave one of the first truly multi-chain financial platforms, uniting fragmented ecosystems into one. 4. For Aave to reach mainstream adoption, it will need to simplify. That means smoother wallets, invisible gas fees, and interfaces that feel as easy as a banking app. Projects building on top of Aave are already experimenting with this, offering one-click borrowing and lending experiences. In the future, users may not even realize they're using Aave. It could become the invisible engine behind user-friendly apps. 5. Governance will also evolve. While the DAO model has empowered the community, it faces challenges of participation and concentration of power. The future may bring more sophisticated systems, quadratic voting, delegation models, or new incentive structures to ensure that Aave stays truly decentralized while scaling its decision-making. 6. Perhaps the most fascinating question is Aave's role in a future with central bank digital currencies. If governments issue digital dollars, euros, or yen, will they integrate with DeFi protocols like Aave or compete against them? Aave could position itself as the bridge, letting users lend and borrow CBDCs alongside crypto assets, or it could remain the alternative system for those who want to avoid government-controlled rails. The big picture is clear. Aave isn't just building a DeFi app, it's laying down the infrastructure for a parallel financial system, one that is open, programmable, and global. Its future will depend on how it balances innovation with safety, openness with compliance, and decentralization with usability. If it succeeds, Aave could be remembered not just as a protocol, but as the ghost that quietly redefined how the world thinks about money and credit. When we step back and look at Aave's journey, what stands out is how much it has already reshaped our idea of finance. What began as ETHLend, a small experiment in peer-to-peer crypto lending, has grown into one of the most influential protocols in decentralized finance. And it did so by tackling an age-old problem, access to credit, in a radically new way. In traditional finance, banks act as the gatekeepers. They decide who gets a loan, what the terms are, and how much it costs. This structure excludes billions of people worldwide who lack the paperwork, credit history, or collateral banks demand. Even for those inside the system, the experience can be slow, expensive, and frustrating. Aave flips this model on its head. By using smart contracts and blockchain, it removes the middleman entirely. That alone is transformative. But Aave didn't stop at copying the old system. It invented features the traditional world can't even imagine, like flash loans, which let users borrow massive sums without collateral, as long as they repay within a single transaction. These innovations expand the boundaries of what finance can do. They show that when rules are written in code, new kinds of opportunities open up. Beyond the technology, Aave's greatest contribution may be its ethos. The protocol is governed not by executives behind closed doors, but by the community through the AAVE token. Decisions about new assets, risk parameters, and upgrades are made collectively. This doesn't mean it's perfect. Governance has challenges of its own, but it does mean Aave embodies the spirit of decentralization. It's finance shaped by the people who use it, not dictated from the top down. Of course, the road hasn't been smooth. Aave faces risks from volatile markets, potential smart contract exploits, and ever-present regulatory uncertainty. Questions linger. Will governments allow open lending protocols to thrive? Can Aave scale to millions of users without compromising safety? And will mainstream users embrace a system that still feels complex compared to a banking app? These aren't small challenges, but they are the same challenges faced by DeFi as a whole. What makes Aave remarkable is its resilience. Time and again, it has adapted. From ETHLend's early struggles to the rebrand, to multi-chain expansion, to institution-friendly products like Aave Arc. The project has shown it can evolve while staying true to its vision, building an open, borderless financial system. Looking forward, Aave's role could grow even larger. As real-world assets become tokenized, Aave might be the marketplace where they are borrowed and lent. As central banks explore digital currencies, Aave could be the bridge between state-issued money and decentralized finance. And as billions of people seek financial inclusion, Aave could be the gateway that gives them access to tools once reserved for a privileged few. But perhaps the most powerful way to think about Aave is as a quiet revolution. Its name, Ghost, is fitting. Aave works invisibly in the background, moving billions in liquidity every day, while most of the world still doesn't notice. Yet, if its vision succeeds, it could haunt the old financial order by showing there's another way. Aave asks us to imagine a world where finance is open, programmable, and fair, where opportunity isn't limited by geography or identity, where innovation happens at the speed of code, not the pace of bureaucracy. That vision is bold and it's still unfolding. In the end, Aave isn't just about lending and borrowing crypto. It's about reimagining what money can do when the rules are rewritten. Whether it becomes the backbone of global finance or remains a pioneering experiment, Aave has already left its mark. It has shown us that the future of finance doesn't have to look like the past, and that in itself is a legacy worth remembering.